Good morning, everyone. This is Tomás Lozano, Head of Investor Relations, Corporate Development, Financial Planning, and ESG. Welcome to Grupo Financiero Banorte second quarter earnings call for 2025. Our CEO, Marco Ramirez, will begin today's call by presenting the main results of the quarter and the first half of the year, and will provide more details on the steps that Banorte is taking to strengthen even further our anti-money laundering capabilities. And lastly, he will also comment on our guidance for the year. Then Rafael Arana, our COO, will go over the financial highlights of the group, providing details on the margin evolution and sensitivity, asset quality, expenses, and our capital allocation for the year. Please note that today's presentation may include forward-looking statements that are subject to risk and uncertainties, which may cause actual results to differ materially. On page 2 of our conference call deck, you will find our full disclaimer regarding forward-looking statements. Thank you. Marcos, please go ahead.
Thank you, Tomás. Good morning, everyone. Thank you for joining our call today. Second quarter of the year displays sound core business performance despite a still turbulent macroeconomic environment. Internal demand remained resilient in the quarter. However, we anticipate a challenging second half of the year, as the global economy still depends on uncertain trade, fiscal, monetary, and geopolitical factors. For the Mexican economy, our economic analysis teams holds its GDP growth forecast at 0.5% for the year 2025, driven by resilient private consumption amidst weaker investment and export dynamics. On the fiscal side, the Mexican government continues with a prudent spending strategy and solid tax revenues, which support the country's fiscal stability and preservation of the investment-grade credit profile. Moreover, we anticipate the Mexican government to continue working closely with the U.S. on trade, migration, and security efforts. Regarding monetary policy, during the first half of the year, the Mexican Central Bank reduced the reference rate by 200 basis points to 8%, and we anticipate reaching 7% by year-end. The Mexican peso has shown resilience, supported by a weaker U.S. dollar and an improved risk perception. Therefore, our economic teams expect 19.50 pesos per dollar in the year 2025 and 19.20 in the year 2026. Finally, before diving into the financial results, I would like to address one of the market's main concerns during the past few weeks. As you know, the U.S. Treasury Department recently designated 3 Mexican-based financial institutions as being of primary money laundering concern. Mexican authorities have confirmed that there is no more financial institutions under investigation, and this was later reinforced by the Mexican Banking Association, which also stated its commitment to strengthen the anti-money laundering framework in the Mexican banking system. In this regard, I would like to take this opportunity to emphasize that Banorte has always operated with very strict anti-money laundering policies and controls, and we're taking important steps to strengthen it even further. We operate under a robust compliance program with dedicated experienced personnel, strong governance, state-of-the-art technological infrastructure, and detailed policies and procedures. Nonetheless, before the U.S. Treasury Department's recent action, and in response to the U.S. government designation of certain drug cartels as foreign terrorist organizations in February, Banorte Board of Directors requested that we take proactive steps beyond what the bank was already doing to mitigate arising risks. With the advice of an expert third party, earlier this year, Banorte began a revision of its anti-money laundering and sanctions compliance programs, including, among other things, 1. Reassessing and updating its compliance policies and procedures. 2. Conducting an in-depth review of customer activity to ensure our controls are effective and to make any appropriate enhancement. And 3. Preparing significant training exercises for critical staff. I assure you that Banorte takes these matters very seriously, closely monitoring all relevant developments. As such, we are prepared to take decisive action to ensure that the bank continues to operate consistently with all applicable laws. Now, shifting gears to the business performance on the slide number 3. Net income in the second quarter declined 4% sequentially to 14.6 billion pesos, driven mainly by three factors. One, the normalization in the insurance business after the seasonal premium peak of the first quarter. Two, our expense allocation strategy to balance distribution to the best of our ability during the year and to take advantage of the current strength of the FX to secure better cost conditions. It is worth noting that the expense guidance for 2025 remains unchanged, and I want to reinforce that this line should be assessed annually rather than quarterly. The third factor was the negative valuation effect of the FX in the margin, which was partially offset by lower funding costs. It is important to remember that 15% of the total loan book is dollar denominated, and therefore the size and interest collected from this portfolio depends on the FX. On the other hand, net income for the first half of 2025 reached 29.9 billion pesos, increasing 6% compared to the same period of last year, mainly driven by a strong performance in core banking revenues, which we will discuss in detail later on. ROE increased 17 basis points in the quarter to 23.6%, reflecting sound operating dynamics across our businesses, as well as the effect of the dividend payment in May. Analyzing the quarterly results by subsidiary, on slide number 4, the bank's net income expanded 7% sequentially, 11.8 billion pesos, supported by dynamic consumer activity in core banking products, a shielded balance sheet, the easing cycle, and larger market-related income, although slightly offset by higher operating expenses. These results yielded an ROE for the bank of 30.2% for the quarter, 225 basis points higher sequentially. With accumulated figures, ROE for the bank stood at 29.1%, 34 basis points higher than the first half of 2024, supported by the balance sheet neutral sensitivity to monetary policy movements in the peso book. The insurance company, as I mentioned before, had the expected quarterly reduction as premium origination normalized after the seasonal renewals of the first quarter. However, on an accumulated basis, we continue to see strong business generations, mostly driven by the bancassurance model. The annuities business quarterly decline accounts for greater claims in the portfolio, in line with business expansion, despite a greater competitive market. In the brokerage sector, the quarterly expansion was driven by increasing fees from higher trading operations. Lastly, the sequential performance of the pension fund business was affected by lower yields on financial products. On slide number 5, lending activity adjusted for the government book had double-digit growth, driven mainly by the consumer portfolio. In the year, the corporate and commercial books grew 17% and 11% respectively, supported by short-term working capital financing. Nevertheless, long-term financing for these segments is still on hold due to the uncertainty surrounding the ongoing trade negotiations with the USA. Moreover, our government book reduced 16% in the year, impacted by short-term maturities and prepayments for state-owned companies, as well as from different states and municipalities, given our current preference for shorter-term financing. However, our appetite to government lending remains unchanged, expecting a more dynamic second half of the year. Turning to slide number 6, the consumer portfolio continues to display strong results despite a tangible economic slowdown. The resilient private consumption, efficient architecture of our internal processes, our below average time to market, and the evolution of our digital capabilities have enabled Banorte to capture additional business from the market. By leveraging on our hyper-personalization business model, we have developed a competitive advantage on two main fronts. One, our ability to increase origination with high-value customers, and two, a competitive risk-adjusted margin supported by our data analytics models and risk appetite. In this sense, consumer lending grew 12% year-over-year, driven by auto loans, which rose 30% given the resilient performance of this business sector, along with our continuous efforts to further strengthen current and new commercial alliances with dealerships. The credit card portfolio increased 18 year-over-year due to greater transactional activity resulting from our improved promotions and rewards and loyalty programs for existing clients. We continue to build a sound product offering to address different demographics and income profiles. Payroll loans grew 9% in the year, mainly due to greater demand from our clients, process optimization, and increased availability through digital channels. And finally, the mortgage book had an 8% annual expansion supported by the increased market presence, thanks to the strategic alliance with key developers, together with the optimization of our credit origination processes. Asset quality, on slide number 7, continues to perform better than expected. In the quarter, the NPL ratio stood at 1.1%, reflecting specific isolated cases in the commercial and corporate books, which have no sectorial or industry-related risks. Most of these cases are expected to resume payments during the next quarter. Consumer products are evolving ahead of expectation, given our focus on hyper-personalized origination. On the other hand, SME NPLs have been normalizing for the past quarters, in line with higher loan origination volume. Cost of risk slightly decreased to 1.7%, supported by the assertiveness of our internal risk models and the credit growth mix during the quarter. Net fees, on slide number 8, they grew 4% quarter-over-quarter and 2% compared to the first half of the last year, driven mainly by higher transaction volumes in consumer products and the strong performance on the acquiring business, reflecting the still sound internal demand. Moreover, as we saw during the first quarter of the year, higher credit origination through the external sales force had an impact on fees paid in the period, offsetting the positive evolution of charge fees. Moving on to sustainability, on slide number 9, we have taken important actions to make our branch network operation more sustainable. During the quarter, we received the EDGE certification for the first 8 branches out of the 64 branches that we plan to certify this year, and we began the installation of the solar panels in the first 25 branches, reiterating our commitment to lower energy and water consumption in our operations. On the social side, we continue with our financial education program, reaching more than 1,000 payroll clients during the quarter. Our ongoing progress in sustainability enables us to continue being part of the important sustainability indexes, such as the FTSE Good for Good Index. And we're proud of being recognized by local authorities for our efforts in developing a more sustainable value chain with our key suppliers. Now, before asking Rafa to cover the main financial results of the group, I would like to address a few additional topics. First, based on the results from our core operations that I just have shared, we feel confident that we reaffirm our guidance for the year. We have seen better than expected results in our expense line and in our main risk indicators. However, other factors such as the effects and foregone interest from the potential dividend distribution in the fourth quarter could impact our results for the year. Second, I want to reiterate Banorte's strong commitment to maintain the highest standards regarding anti-money laundering and to constantly adopt global best practices in this matter to protect our operations. And last but not least, regarding Bineo, we are still evaluating the best actions to take. So far, we can tell you that we are already operating with a linear cost structure in the entity. As soon as we have additional information on this matter, it will be promptly communicated to the market. Now, with this, I continue my remarks. Rafa, please go ahead.
Thank you, Marcos. Thank you all for attending the meeting. I would like to start with and thank you for the questions that you always give us a day before the call after we produce the results, because that allows us to address on a very I would say detailed basis what are your main concerns about it. If I go to the NII first, as you can see, what is relevant about the NII is that the loans to deposits is growing 15%. And even that number could be higher. I'm going to explain that in a bit, but loans to deposits continue to grow in a very important way, 15%. So that really is showing two things, that we have a very resilient loan book based upon the mix that we have on the fixed and a variable, and a continuous downward trend on the funding cost. If you continue to see on the table, you could see that the effect that we have on the FX that Marcos just mentioned is really reducing by 887 million pesos the effect of NII. So if you extract that, because that was not provided in any way when we set up the guidance, and we are not changing the guidance, as Marcos mentioned, but that is really affecting us by 887 on the quarter. If you put that number back into the NII, you will see that the NII could expand even more than that. So that number is not a small number, 887. Nobody was expecting the peso at the levels that is today in that part. We have a very specific strategy to keep containing that, but there was a big surprise for that, and we are counterbalance that in I will tell you in a minute time. But it's not small number. So when you consider the impact on the results of the quarter, you have to take into account the effect that FX has on us. Why? If I go to the loan book, 15% of the loan book is in dollar terms. So obviously we receive less results from that loan book. And if you go also to the structure of the capital notes that we have, the 81s, we also are receiving less than expected, because obviously even if we have a perfect hedge on the hedge to call policy that we have, obviously we are paying less interest on that using the capital base, but the total amount of the capital base is being reduced by 30 basis points. That's compared to the total capital number that we have, that is 21.7, is a very strong capital numbers on that part. So the FX effect has affecting the capital in the capital notes, has effect on the dollar book, and when you add everything up, that is up to 887 million pesos for the quarter on that part. If you ask me if there will be more strengthening on the peso side, I don't know. Eventually, our chief economist will touch on that part. So once we address the NII, I would say that that's the main effect that we have, but a very strong loan to deposit ratio that is really hovering up the loans to deposits. Okay, now if I now move into fees, in fees, fees and the no, in the next one, please. When we go to the names, you see that the 6.4 of the name has to be explained, and let me just try to see why the NIM continues to be very resilient. And that NIM, once you add the 800 that I just mentioned about the FX, that NIM is basically being extremely resilient, because if I'm going to give you two numbers, if you go to May 24, the reference rate was at 11.06. And if you go to May 2025, the reference rate is at 8.55. But when you look at the spread of the book, the spread of the book has only been reduced by 4 basis points. So when you see a strong reduction of 255 basis points from the reference rate, the strength of the balance sheet that we built based upon the fixed rate and the continuous downward trend on the funding cost allow us to have an effect of only 4 basis points on the spread. that extremely relevant. And that will continue to benefit in the coming months as the downward trend in the rates continue to happen. If I now look at the banking fees, the banking net fees, as Marcos explained, you have to remember that when we have a very strong growth in the mortgage book and in the car loans, part of that mortgage book is sold by the branches online on the digital capabilities, but still some of that happens with the alliances that we have with many brands in the market. When you have those many brands in the market, you have to have a specific sales force devoted to those dealers, and that you have to pay in front the fees that you have for every one of those sales that happen at the dealers. So that is pushing the fees paid up, but the advantage of that is you pay that fee once and you get the benefit of the full loan for the life of the loan. So if we continue to grow the consumer book at the pace that we are growing the consumer book, and we think that we can continue to do so, you will continue to see this compression of the net fees. But eventually, when you see that on the margin and all those, that will be more than compensated. So the other fact that you need to see on the fee side is that everything that is on the digital side continue to expand very nicely. So if I move to the next one, the sensitivity on the balance sheet is only 20 million. So that shows exactly the good work that the bank has been doing on preparing the balance sheet for the scenario that we've seen on the rates, but also allowing us, based upon the mix that we have on the portfolio, to expect a continuous evolution and sustainability on the margin side that we have been enjoying in the past year. Okay, and on the dollar book, as you know, there's more lack of certainty, and most of the loans on the dollar books are in variable rate, not in fixed rate. So we have to be much more flexible on the dollar book. That, as I already told you, is 15% of the book. If I move now to the profitability of the bank, Marcos already touched on this, but I would like to stress one thing. On the ROA, we continue to expand. The ROA, if you look at the first quarter to the second quarter, we grew from 2.4 to 2.5. And on the return on equity, we grew from 28 to 30.2%, or 30.2% on the return on equity, with our strong capital base and taking into account that we are the least leveraged bank in the system on that part. So we continue to have a reasonable growth on the bank net income, very strong return on the equity, and a continuous evolution on the return on assets. So if we go now to the next one, we always project this because based upon the effect that we have on the regulatory terms on the I would say insurance annuities company, we basically split the NIM without the insurance and annuities and the NIM about the group. So it's basically to show you without that effect that sometimes the inflation has on annuities. So we are staying at 6.2 at the group level. If we now go to the cost of funds is trending, and now you see some of you will say that it's a small decrease on the 48.1, but you have to remember that based upon the position that we have on the time deposit base, we have to wait for 3 months to have the full effect of every time there's a reduction on the rate. So you will continue to see that number trending down on a monthly by monthly basis. And that has shown why when you look at the NII and when you look at the the effect of the NIM, that number will continue to be quite supportive for the expansion of the NIM. If I go to the asset quality, and some of you called us yesterday about that, and I will ask Gerardo in a minute to go on this. But there's something that some people say, well, there's some pickup on some of you look at the NPLs. But you have to look at this in an overall piece. And some of you asked me about specifically the SME. I will touch that. SME, as you know, we have a very low number of NPLs coming down as low as 1.1 after the pandemic. That started to pick up to 2.2. Compared to the 6.2 that we used to run that portfolio, is extremely low. Now you see a slight pickup. Many actions has been taken there to address that. You will see that a continuous downward trend, but you will see the full effect up until the first quarter of next year. So when you look at the cost of risk, and Gerardo will explain why the cost of risk is going down and the NPLs have a very slight pickup on that part. The cost of risk continues to be better than expected. If you look at the guidance that we gave, we are staying at 1.7. And if you strip the Rappi joint venture, we have 1.6%. So it's going better than expected. Write-offs, because many people sometimes think that Banorte has the policy that immediately to write off when we see a spike on the portfolio. We never do that. As you can see that there's a very, very level trend on that part. Credit provisions also going down. Notwithstanding that we are growing the consumer portfolio, that you know that requires a lot of provisions on day one. So I will turn to Gerardo to try to address things about the risk that you were concerned about yesterday.
Yeah. Thank you, Rafa. As you have seen in our report, 5 key credit risk metrics have presented a very interesting dynamic. You have seen that NPL and NPL formation has gone up, cost of risk going down, lower provision charges also are taking place, and also the coverage ratio is going down. If you put together a very brief and executive explanation of these 5 key credit risk metrics, I will tell you the following. During this second quarter, the NPL ratio and NPL formation rate increased, reflecting a moderate deterioration in asset quality, primarily driven by commercial lending specific cases of idiosyncratic nature. Up to now, there is a very slight reversion or normalization, as Marcos said, taking place in comparison with record low levels of both NPL and NPL formation. To be clear, the bank maintains a very disciplined and forward-looking approach to credit risk. The increase in NPLs was partially anticipated, and the underlying exposures are, in large part, well collateralized and supported by solid recovery prospects. Despite the uptick in non-performing assets, provision charges decline, resulting in a lower cost of risk. This is attributable to 3 factors. First, better recovery prospects. Second, better origination in low-risk segments in the retail loan book. And consequently, newer vintages that are of even higher credit risk quality. As you have seen, and at the same time, the coverage ratio declined modestly, yet remains within the bank's strategic risk appetite and comfortably above regulatory requirements. The bank continues to maintain a robust reserve buffers with coverage ratios that are appropriate given the credit quality and expected recoveries of the portfolio. Overall, and to just end my commentary, while credit quality trends warrant close monitoring, the bank is well positioned to manage potential stress scenarios, supported by proactive risk management, adequate capital buffers, and conservative provisioning accumulated in prior periods.
Okay, thank you. So that explains exactly where we are in that. We are always vigilant, and there's something that has to be mentioned here. When you see that Banorte is growing on the consumer group the way it has been growing, that I think is in a quite important way, is with a very disciplined credit policy that we haven't changed in more than 5-6 years, that we address the market in a very specific way. If we like the risk and we like the client, we can be aggressive even on the price, but never on the risk. And that has allowed us to sustain a permanent growth from the consumer group, because some people has asked us that if you see a market that basically is not growing based upon a very lack of growth on the economy, how Banorte is growing at the pace that is growing on the loan book, especially on the consumer side. But I will not diminish the corporate and commercial also. And the reason is that we are taking market share, not because we are chasing the market share number, but because based upon the process that Marcos mentioned and the digital revolution of the bank, we have been a very convenient bank for our clients. And since we price the client based upon the risk of each different client and the value that client brings to the bank, that allows us to really have a very differential offer into the market. So when you see a compression in the economy in the way that Mexico has been seen, the only way that you can grow your portfolio is that you are considered one of the best options in the market. And I think that's why the reason that Banorte has been growing the consumer book and also the commercial and the corporate on that part. If I now move to the expense piece, and this is something very important that Marcos mentioned. When you see a pickup on the expense line, and we touched that point in the last call, what we are doing is taking advantage basically of the expenses that we have in dollars. So we are advancing expenses on that, and we are normalizing the expense line. So I'm gonna tell you a number. When we set up on the guidance of the beginning of the year, we set up the guidance that we will be on a double-digit number. Now I can assure you that by the end of the year, we will be on a one-digit number on the expense line. So that will compensate the lack of the effect that we have on the valuation based upon the price that the peso has today on the FX. So we are doing all the efforts on the expense line to be one digit by the end of the year, instead of the 2-digit that we have been experienced on the past 2 years, to go down to one digit, to allow us to compensate the other issues that we have on the FX side. Another thing that is relevant to notice is that some people has been asking us about the effect that we have having about the fintechs on the funding side. And I can give you a very specific numbers that I would say are relevant. Non-interest bearing deposits, as we see today, are growing at 8%, and the time deposits the time deposits are growing at 11%. So when you look at the overall growth in demand deposits, with zero cost and with cost, we go to 11%. So as you can see, we continue to grow the funding at a very reasonable cost, at a very good pace. So the expense line that you see here will be, again, in the third quarter, you will see a slight pickup on the third quarter, or even a level against the second quarter. But you will see a huge drop in the fourth quarter, that when the full effect of all the actions taken will take place to put us on one single-digit number for the expense ratio. Okay, if I now move into the capital ratio, as we mentioned, is back again to Remember that on the fourth quarter, we set up for the dividends that we pay in May. So that reduced for 13.2, then regaining 14.4, and now we are back around 14% on the core tier one. The total capital ratio is 21.7. As we mentioned, the effect of the FX on the capital ratio is around 30 basis points, well above any requirements that the authorities have. One other important thing to mention is that the LDR that usually Banorte has been basically around 100 and 102, 103. Now we are below 100, around 94, 95 on the LDR. Okay. So I will also try to address an issue that was sent to us yesterday, and thank you for the question about the impact on the trading gains. Trading gains, as you have seen on the graph and on the red line, trading gains for us is a flat line. But based upon the position and the size of the balance sheet, if you compare what was the effect of the trading gains on the revenue composition, if I take 2014, when we start to address that big number that was coming from trading on the overall revenue composition of the bank, was topping 8%. Now, if you see the number is usually around 4 to 5 to 6%, as currently is at this level. So we haven't changed our policy that we basically use the trading for the sake of our clients on that part. Obviously, we had a good month, and we love to have good months, but not because it's basically the size and the positions that we hold at the bank. Okay. Then if I go to the guidance, and Marcos already addressed that, we are not changing the guidance, but as I mentioned to you, we will be looking at a single-digit number on the expense growth for the end of the year. So don't get nervous if on the third quarter you continue to see a double-digit cost number, because that will drop substantially in the fourth quarter to have a full year at only one single-digit number. With that, I close my remarks.
Thank you, Marcos and Rafael. We will now move to our Q&A session. As always, we kindly ask you to present only your most relevant question, and we will be happy to take any other questions anytime after the call. Questions will be ordered on a first-come, first-served basis. Please raise your hand on the platform, and we will unmute you when your turn comes. Jose Luis and myself will be calling the name of the person that is next on the line. If there are any technical difficulties, please let us know by using the chat. Thank you. We are now ready to start the Q&A. We will begin with Tito Labarta from Goldman Sachs. Tito, please go ahead.
Hi, thanks, Tomasa. Good morning, Marcos, Rafael. Thanks for the call and taking my question. I guess my question is, on the NII, two parts. First, on the FX, right? I think you mentioned you expect to end the year around 1950, but it's still a little bit stronger than that. Just could there be just further impact from that if the currency stays at around this 1860 level or even appreciates more? Just to think about any hedging you could do to offset that, or should we just expect if the FX continues to appreciate, there should be some further downside risk related to that? Conversely, if the FX does go to that 1950 or depreciates, would you be able to reverse some of that negative impact that we saw this quarter, just to try to think about the overall FX impact? And then the second question, somewhat also related to the NII, more on the loan growth, right? Because Marcos, you mentioned second half of the year should be more challenging. I mean, you're still doing good on the loan growth, the asset quality holding up, but could there be some downside risk to loan growth from here just because the economy is slowing? There's still a lot of uncertainty. Any concerns about loan growth slowing further? Thank you.
Thank you, Tito. The first one, you are right. If the FX continues to strengthen, obviously we will produce the same amount in dollars, but it's going to be less pesos, and it's going to hit us a little bit. But I see more upside than downside. No, right now, 1960, and and we already swallow all the FX problem, no? But it's not a problem, the FX reality. So if it returns to 20 something, yes, we will reverse that, and we will learn more and we will explain that. And if it goes to, I don't know, 17 something or 10, yes, it will hit us a little bit more. But on my point of view, we already took the hit, and this is it. That's my point, no? And the second one, yes, everybody's concerned about the loan growth, but let me tell you that the first semester we grow 0.2%, and now we are expecting to grow 0.5%, which is more. The second semester looks better than the first one in terms of growth, no? And that is going to give us an idea that maybe it is not so bad for the next quarter, the next semester. So we are working hard and trying to get to the objective, but it seems that it's feasible and we can do it. I don't know, Rafa, if you want to add something.
No, I think I would touch also on the first one, Tito. The FX, you have to split the effect on that. On the dollar book, it hit us on a direct way. I mean, on that part, we have a funding in dollars, and that funding in dollars go to the dollar book, and the dollar books get converted to pesos, and that's the effect that we have. On the 81s, because there were some concerns also on the 81s. The 81s, as you remember, we hedged to call on day one. We basically buy bonds, UMS, to match perfectly the 81s. So the effect that you have in that is that the money that you take from the capital base is less than what was supposed to be, but also you have a reduction on this quarter of 30 basis points on the total cap, because our position in 81s is around 31% of the total capital base. But that's perfectly hedged. That's something that needs to be addressed in a very important way. We don't need to hedge more the 81. The 81s are hedged on day one. If by contrary the peso weakens more, then you have a pickup on the capital base because of the value of the 81s. But the 81s are perfectly hedged, and the other one, the dollar book, is being basically hedged on the way that you have the funding, and you basically use the tools that you have to hedge the funding base. But honestly, it's more a direct effect on this part. And as Marcos mentioned, I think honestly, and Alejandro, that is our chief economist, could give us more view about the peso if you want.
Yes, for sure. Thank you, Rafa. Thank you for the question, Tito. This is Alejandro Padilla, chief economist. Well, as Marcos and Rafael were mentioning before, we think that there are some conditions that support our view that the Mexican peso should go back to a more normal level. Indeed, I would like to mention that our real exchange rate models and other type of models that we have suggest that the fair value of the Mexican peso should hover around 19.20, and that's why in our trajectory of the FX for the rest of 2025 and for 2026, we have figures hovering around that number. And by the end of the year, we need to take into account that Banxico most likely will continue cutting rates. And currently, we are in a very tight spread between the interest rate in the US and Mexico. We are forecasting 100 basis points of rate reduction in Mexico and only 50 basis points in the US. So the spread between Mexico and the US will continue declining, and that will put a bit of pressure to the FX by the end of the year. That's our main scenario. And the other one is that we have to take into account that by the end of this year, Mexico will be closer to the US in terms of the revision of the USMCA. Although the revision will start in 2026, the process or the initial process is likely to start by the end of this year. And that will put also a bit of pressure in terms of all of the threats that President Trump will put into Mexico in order to have better negotiating conditions. So all in all, I think that from the macro perspective, although the actual performance of the Mexican peso is explained by a strong deterioration of the US dollar, I think that by year end, we could reach something closer to 19 or 1950, which are the levels suggested by our models.
Great.
Of your other question, Tito, in terms of the economy, well, as Marcos was mentioning, well, some of the figures for the second quarter of this year suggest that we will be growing between 0.2 to 0.4 on a quarterly basis. The preliminary number will be released on July 30, but we think that the second quarter will be similar or slightly better than the first quarter. And thinking about the second half of the year, I think that private consumption associated with services mainly will continue to be part of the main drivers of the economy. So far, we have been observing manufacturing goods performing relatively well, supported by the idea that US firms are putting some orders ahead. They are accumulating inventories in order to avoid the effect of the tariffs from President Trump. So far, I think the second half of the year will be very similar to what we have been observing in the last months. So that's why we are maintaining our GDP forecast for the entire 2025 of 0.5%.
That's very clear, very thorough. Thank you for that. If I can then just one quick follow-up on the loan growth, because I think, Marcos, you mentioned you still expect the government portfolio to grow, right? It's come down quite a bit this quarter, but as that government portfolio starts to grow again, could that put any negative pressure on margin just from a mix perspective? Just to understand between the different segments how that could impact them also. Thank you.
No, go ahead, Rafa.
No, Tito. Remember that the effect on the margin will be benefit by a lower funding cost. So we don't see any effect because if we grow the book on the government side, I don't see a real material effect on the margin. I think the margin will continue to be quite strong and sustainable the way they are through 6.4, 6.5, 6.6. No, and the effect of the government book, if it starts to grow, will not affect the margin in that way.
Okay, that's very helpful. Thanks, Rafa. Thanks, Marcos.
Thank you.
We'll now go with Yuri Fernandez from JP Morgan. Go ahead, Yuri.
Thank you, Tomás, and good morning, Rafa, Marcos. I will go back to the coverage, and Gerardo and Rafa, they already provided a good color on these, on why the coverage was down and the collaterals. But just trying to understand here, like your view here is that the NPLs will go down and coverage ratio will eventually go up, or this is the new level for coverage here that you're comfortable given, you are not seeing a major worsening on asset quality. I just would like to understand a little bit more, because even the economy is weaker, and this was not only on the corporate side, this was SMEs, as you said, and also a little bit of credit cards. My concern here is that a weaker economy will continue to drive, like not major, but marginal NPL worsening, and you already consumed a lot of coverage. So just trying to understand a little bit more, if you can provide more details, I would appreciate it. Thank you.
Thank you, Yuri. I think Dr. Salazar, go ahead.
Thank you, Marcos. Yuri, you're right. What we have learned from past cycles, from empirical patterns, is that in the retail side of the loan book, you could see some sensitivity to slow growth or even a recession that it's considered high in SME loans, medium to high in credit cards, medium in auto loans, low to medium in payroll lending, and also lower in mortgages, unless there is a housing crash, which is not part of our central scenario. So a very good question remains if we keep up with the loan growth that we have talked about. You will see that the main reasons for that expectation, even in low growth GDP conditions, are mainly four factors, Yuri. One is that GDP is not equal to credit demand, directly at least. That is, credit demand can still rise due to liquidity needs, refinancing, or working capital pressures, even if economic output goes slightly lower growth or even contracts. The second reason for this expectation is that there is an opportunity to gain market share. We can see that in this type of cycles, some weaker or more conservative competitors tighten lending, opening space for well-capitalized banks to expand carefully. The third reason is that we could encounter some segment-level divergence. Some sectors and households may remain resilient or even behavior as counter-cyclical. That type of behavior could be found in segments like healthcare or food, payroll-backed lending, among others. And the last factor that we support this loan growth scenario is flight to quality. And that's important because customers may leave riskier lenders or fintechs, preferring stable banks with a track record, given Banorte loan growth without loosening credit standards. So that are the four main premises that support that loan growth expectation. And also, we are very well aware of what to expect in different segments of the loan book that could eventually behave in the way I just mentioned at the beginning of this comment.
No, super clear. And I guess the Mexican, overall, you remain overall with low leverage, right? Even growing in the past maybe 2-3 years, I think leverage is still low for the system, right?
Yeah.
If I may just attack on one half on the expenses, something that we noted here was Bineo decreasing a lot, the G&A, personal fees, and like personal expenses. If you can comment on Bineo, like if this is also part of your guidance on expenses to go to the single digits by year end.
No, I think Bineo is just part of the overall effort that we have on the expense line. I think the expense line has been a continuous effort. That if you look at the recurrent base of the expense ratio of Banorte, the recurrent base has been quite steady at 6 to 7%. When you start reducing the effect of Rappi and Bineo, you start getting some benefits about this, but also a lot of other initiatives that have been taken in place. I mean, automation is coming easy into the bank because of all the investment that we have been doing in technology. So when you look at the ratio of the administrative expenses and operational expenses to total revenue and net income, that continues to trend down. So that's also another very important source of the way that we are reducing the cost, and taking advantage also of the dollar weakness. We are taking advantage of that on the payments on the software base that we have. So it's a lot of actions, not just Bineo and Rappi.
No, thank you, Rafa. Thank you all.
Thank you.
Thank you. Now we will continue with Ernesto Gabilondo from Bank of America. Ernesto, please go ahead.
Thank you, Tomás. Hi, good morning, Marcos and Rafa, and thanks for the opportunity to ask questions. I have a follow-up also in terms of OPEX. You mentioned it could be favored by FX, by Bineo, but can you give us some other examples of some of the expenses that you have anticipated or some of the expenses that you can cut, especially in the last quarter? And then I have a second question in terms of asset quality. you mentioned there were some isolated cases in the commercial portfolio that show higher NPL ratios. I know that you cannot disclose the names, but can you share which type of industries were related to those loans? Thank you.
Thank you, Ernesto. The first one example is that all the dollar-denominated payments that we need to do for this year, instead of waiting until the end of the year, we are paying that in advance, no? And that's why you will see that they always happen all the years that this step in the cost line is going to be reduced, and that's why we feel comfortable that it's going to be below 10 the total expenses. One big one is the dollar-denominated assets that we are already doing it since now, and you will see it there. And about as we said, we don't have any sectorial or geographical problems. We have two minor problems with specific companies. I don't know if we can take the sector only.
Yeah, this is really a very mixed selection of economic activity. One of the cases is related to non-bank financial intermediary, which is small to medium size. Another case is related to energy or oil and gas, which is a very specific project that could represent problems on its own. There is not a sectorial explanation for these low credit risk, low risk quality performance. But there are just two examples, Ernesto, that those sectors are not related, do not belong to the same geographic zone in which they operate, and that will give you some color regarding asset quality and NPLs cases.
Perfect. Now, thank you so much. And just one last one, in terms of the potential special dividend, when can we expect any announcement on this in the next quarter? And if it could be similar to the one you paid last year?
We're running the numbers. We still don't know. It depends on everything. But yes, it would be announced the next quarter. We already have the permission. If it is feasible, we can do it. And it's only a matter that the numbers are right for us and for you. Yeah, and that's it, Rafa. I don't know if something
No,
else.
as you say, Marcos, in the third quarter, it will be announced.
Excellent. Thank you so much.
Thank you.
We'll now go with Renato Meloni from Autonomous. Go ahead, Renato.
Hi, everyone. Good morning. Thanks for taking my questions here. So I'd like to go back to asset quality, but particularly in consumer, right? There was another deterioration here on stage 3 loans for credit cards. And I wonder if you could comment a bit on that. But then further and connected to this, I'm wondering here, how do you expect to keep growing in consumer lending at the same pace, but within the same with the same asset quality, right? I think going back to your earlier comments, you're saying that your competitors are tightening credit. Does that imply some adverse selection here for you? So yeah, thank you.
We will start with the second one with Rafa, please.
No. Remember that if you look at the information from the CNBV, Banorte has a very specific way that we compete in the market. First, we compete by individual. We don't compete by a general offer to the market. The second one is that we are very always strict in risk. So the way to avoid negative selection is that if you look at the market and the people that is worth because of the risk, they will always get the best deal in Banorte. So that really take away the possibility of negative selection. We never play the game that high interest rates that we charge on the loan will eventually cover the losses. We never follow that policy in that part. What we go is we look at the client, we see the risk of the client, what's the value of the client, the potential value of the client, the relationship that the client has with us and the relationship that the client has with other banks, and then we set up the offer for them. But the main issue has to be that we like the risk. That's the way we avoid negative selection. So don't think that we are getting market share because we are pushing the pedal by getting clients. No, it's because we have better processes, better offers to the clients on a one-to-one basis. And also, if you look at the NPS that we have at the bank, at the branches, and at the digital offering that we have, NPS are around 85, 87. So all that allow us to capture market share, not because we go for the silly policy that put the high interest rates and that will cover the losses. We never do that.
I would like to add on what Rafa just said, is that if you run the numbers, data is gonna back what he said. It is not a subjective point of view of any kind. We can demonstrate that if you divide provisions by the average size of the loan book, by product, or even by the total loan book, our closest competitor has 39% more volatility making provisions that we do. And that speaks a lot of what just Rafa said. And taking on the other question regarding asset quality on the consumer, in the consumer book or even credit cards, I will tell you that we are constantly differentiating good from bad provisions. Provisions going up or going down are not always bad or good news in that sense. But I will tell you that good provisions are forward-looking, are of a prudent nature, and are very proactive. Three factors tend to explain what I just said. They are always based on expected loss models. We are very consistent making risk scoring and calibrating the models. And also, we have a stable and declining cost of risk, as you can see. And that's a very important symptom regarding what the coming vintages are, of what quality I mean. And I will say, to provide some color, Renato, regarding asset quality in the consumer loan book.
No, thanks. That's very clear.
Thank you, Renato.
Thank you. Now we'll continue with Brian Flores from Citi. Brian, please go ahead.
Hi, team. Thank you for the opportunity. I have a question on your NII sensitivity. Maybe Alejandro could help us here, because it is very, very small, right? Given your expectations, I think you mentioned still some reductions for 2025 is in your budget, but could you elaborate a bit on what are you expecting for 2026? And if that's the case, how would you position that, given that expectation you have internally? And then a quick follow-up on the tax rate, because we saw a high tax rate in the first quarter, a smaller one on the second quarter. So for the whole year, should we expect it to be more on similar levels for the first quarter or the second quarter? Thank you.
I will start for the second one, which is a easy one. The tax rate, we're not changing. Sometimes during the quarters, we have a mix because we pay on advance or whatever, but it's going to be the one that is in the guide, and that's the easy one to know what's going to happen. And the first one, please go ahead.
Thank you, Marcos, and thank you, Brian. Well, that's a very good question, because when you see market consensus, the number by the end of the year is 7.5 for the interest rate by the end of this year. And what we are forecasting is that Banxico will try to front load the remaining of the cuts in this 2025, taking into account that the economy is in a weaker position, and that when you analyze the rhetoric of most of the members of the central bank, they are willing to continue cutting rates. So that's why we are expecting 7% by the end of the year, vis-a-vis 7.5 from market consensus, but I don't have an additional rate cut in 2026. I have 7% for the entire 2026, and the market is going down to that 7 or even slightly lower than that 7%. So that's the main difference between the market and our forecast. And I hope this helps to understand also the sensitivity. And I don't know, Rafael.
No, the sensitivity is the $1 million question, because when you start to doing the position for the potential high rates, I think we are, as you know, when we start to doing on the downward trend, we anticipate that it costs us. We build up the fixed rate part of the book on that part, and that cost us. Some people thought that we were crazy, but I think it was a good anticipation, because a lot of people, the treasury, the risk people, everybody was involved in the decision, not just one person. And we will do the same. And remember that you need to look for the hedges when the risk is quite low for that occasion to happen. And that's when the hedges are very cheap. And that's what we usually do.
Thanks,
Perfect.
Rafa.
Thank
Thanks,
you.
Ryan.
The next question is from Carlos Gomez Lopez from HSBC. Go ahead, Carlos.
Thank you for taking the question. Going back to the margin, I wanted to clarify this. So the impact of Forex is partially because you have an asset which goes to the income statement, which is the loans, and then you have some funding, part of the funding, which is the 81, which at least the coupon that you pay on the 81 will be negative. So you have a positive impact. So in this, because the Forex goes down, you have a negative impact on the assets, and you don't reflect that on the liabilities. My question is, should we also see it, therefore, when first, is this a correct interpretation? And second, should we also see it when the peso depreciates, and therefore the margin that we saw, let's say, in the third and fourth quarter of last year will be a little bit higher than normal? Would that be correct?
Yeah.
Yes, go ahead, Rafa.
That's correct. And you mentioned that very, very well, Carlos. I think you see the effect on the FX on the loan book. That's perfectly clear for that. Then the valuation kick us by 887 million pesos. When you go to the 81s, as you mentioned, the coupon that we are paying from the 81 is cost us less. No matter that, you see an effect of about on the risk weighting assets that goes into the capital base, about 30 basis points. And I will talk about this again. The effect on the 81s on the hedging side are perfectly covered on hedge to call on day one. So the fact of that is that it's cost us, the capital is paying less pesos because of the hedging that we have on the 81s.
Okay.
So right now.
Okay, and if I can add a totally different subject, we have had these 3 interventions that you addressed them early on, and you've been very proactive from the beginning in talking to the market about it. Do you have any interest at all in some of the assets or some of the business that is coming out of the 3 companies which are the subject of these sanctions?
It's a difficult question. We are not interested in buying a package or something like that, no? But as we are big and everybody trusts Banorte, so it's a way to saying it, there are some assets that they are coming to us, no? So we will be happy to see what's going on and take a lot of the regulation into account. But it seems to us that we are going to grow, but not directly because we are going to buy assets, but the other way, indirectly, because these assets, they are coming to us naturally, no? That's what we are seeing, but we are not looking for making offers or buying assets in like a package, no?
Very clear. Thank you so much.
Thank you, Carlos.
Now we'll continue with Pablo Ordóñez from GBM. Pablo, please go ahead.
Yes. Hi, good morning, Marcos, Rafa, and Gerardo. Congratulations on your results. I have a couple of questions. First, on your auto loans, they continue to show a great performance, growing 29% year over year, also with great asset quality. My question here is, how sustainable is this trend, and would you expect some normalization ahead for this business segment? And the second question will be a quick follow-up on asset quality, but more structural question. Some participants have mentioned that they have observed some deterioration in the credit bureau data for Mexican consumers and households after the significant supply and increase in credit cards from fintechs and new participants. Do you think that this is making more harder the underwriting of credits on your consumer segment, and what levels of growth rates for the consumer segment and NPLs should we expect ahead? Thank you.
Thank you, Pablo. The first one, obviously, we cannot go this way. We sign a lot of contracts with dealerships, new companies, and that's why we now we have this base. And now the base is bigger and it's not so easy to move, but we expect to grow it in the future at let's say 2 digits, no, around 2 digits. That sounds reasonable with the new base. And now going to the asset quality again is Dr. Salazar.
Thank you, Marcos. Pablo, you're making a great question. We will disclose it as soon as it comes. We don't have this scenario on the horizon yet, but we are being very cautious regarding asset quality, because in the moment we start making bad provisions, let me underline bad provisions, of a reactive nature that responds to deterioration or to signal an underwriting or recovery processes weaknesses, we will let you know immediately. Up to now, this is not the case. Some of the symptoms regarding that kind of a scenario, again, which we do not expect, will be a provision spike that follows vintage deterioration. We have not seen that. Or another one will be declining origination quality. Early non-performing signals do not point to that scenario. We are not expecting it, but it could happen, and we are very aware of that. And we are saying this with all humility possible. And also, if we start to see an increasing cost of risk, that it is sustainable throughout months or quarters, you will see that, and we will disclose it as it is.
And if I may add to Gerardo, remember on the guidance, we set up the cost of risk well above what we currently are, to 2.2. So we were perfectly clear that when we set up the guidance and the budget for the bank, there will be eventually potential issues concerning the GDP. The fact is that by not taking a very negative selection in the market, and the models that we use and the discipline that we have on the book allow us to have a very early warnings of everything, anything that happens, like we had on the SME, and immediately action was taken on that part. So remember one thing: it's not that Mexico is disappearing. You have still a quite active economy. If you look at the labor numbers, the labor numbers continue to be quite sustainable. And if you look at the evolution of the payroll loans that are not reaching double digit for us, but we are growing and getting market share from that. The payroll loans have been quite steady on the NPL ratio and on the cost of risk. There was a pickup, not this year, but at the end of last year, and actions were taken immediately to remediate that. So what Gerardo mentioned about those early warnings, we are quite fast to take action when we see those. And the market that is there to be taken, believe me, the capacity that Banorte has to give the best offer to the market is going to be there if we like the risk. And you touch a very important point, and I want to address all that. Yes, it's true that the fintechs are charging a lot for the credit cards, but many of those clients were not credit-worthy for us, so we were not getting credit to those. But the problem for those clients, and I don't think it's good for financial inclusion, is that they are being sent to the credit bureau at the earliest stage of their credit life. So that is something that we don't like, and we are addressing that, and we will be launching very, I would say, innovative products to try to remediate that and not to keep sending people to the credit bureau that doesn't have the financial, I would say, understanding to take the loans in the way that they have to take.
Thank you, Rafa. Thank you, Pablo.
Thanks a lot, guys.
Yeah, the next question is from Andres Soto from Santander. Go ahead, Andres.
Thank you, José Luis. Good morning, everybody. Thank you for the presentation. My question is regarding your 2026 expectations. You guys have already mentioned a few variables. I'm curious about specifically about GDP. Obviously, multiple uncertainties, including the USMCA renegotiation, but consensus shows an expectation of 1.5% GDP growth for Mexico, which will imply another year of weak growth for the country. So my question specifically is, under that scenario, what type of loan growth and cost of risk will make sense for you guys looking into the next year?
First, talk about the 26, and we will discuss what we're going to do if that happens.
For sure, Marcos. Thank you. Thank you, Andres. Well, we have a forecast of 1.8% for GDP next year, which is slightly above market consensus. As you can notice, it is slightly below potential GDP in Mexico, which is between 1.9 and 2%. However, when you compare it with 2025, it suggests that there will be a recovery of the Mexican economy. I think one of the main drivers for 2026 has to do with I think better conditions in terms of trade, because firms will have a better visibility of what's going to happen with the USMCA 2.0. And also we have to take into account that in 2026 we have the World Cup. Although Mexico is not the main host, we will have several games, and that will boost private consumption in Mexico. That will boost tourism, and we think that there are some other industries that has to do with, for example, infrastructure. When you see Monterrey, Guadalajara, Ciudad de Mexico, or Mexico City, which are the hosting cities, they are deploying some infrastructure in order to receive tourists throughout the World Cup. So I think there are several factors that are within that 1.8% that we have for next year.
And Andres, it's easier to say to bet who's gonna win the World Cup that to give you a forward looking right now. We don't have it, and as soon as we develop next year and the other year, we will start to see how it develops. No, I don't know, Rafael.
No, I think this is going on a quarter-to-quarter basis. We continue to see strong demand of the consumer. We continue to see good penetration in the market. But usually, what we see is by the third quarter, at the end of the fourth quarter, we have a pretty good idea of what's going to happen in the next year. At this point in time, Andres, I would be on the chair of the World Bank telling what is going to happen next year if I knew.
Fair enough. Thank you, guys, and congratulations on the results.
Thank you.
Thank you. We have two more questions. One from Edson Murguia from SummaCap. Edson, please go ahead.
Hi, good afternoon. Thank you for taking my questions. My first one is related to the early redemption that you mentioned during this month specifically. What was the rationale, and if we can expect another additional early redemption for 2025? And my second question is regarding on the brokerage business. How sustainable is the return on equity? This second quarter was an outstanding number, but just join the dots. Was related to the market conditions or it's more fundamentally? Thank you.
Please go ahead.
Sorry, Edson, what you mean by early redemption?
I think it was the notes of the treasury, and it's part of the constant optimization that the treasury does. So that depends on the constant review that the treasury does. So we cannot tell you they will do all the redemptions in the next quarters or not. It's part of the strategy.
It's totally opportunistic when we do that and based upon the positions that we hold, but it's not really part of the ongoing day-to-day business of the bank. The brokerage business, as you see, is 70%. And if you look at the numbers for the last year and this year, you continue to see that number pretty sound. The reason for that is the insurance business is performing quite well. It's growing 14% for the year. We are growing nicely in everything that is related to the consumer and accompanying the clients on that. And when you see, and thank you for the question, because that allows me to tell some of the questions that were sent to us yesterday, that what was the increase in provisions for the insurance business. And basically that is related to a wealth management product that we launched that is becoming quite successful, but because the way it's being booked, you have to put down provisions on day one on an important way. But that is a very important product that is moving Banorte more and more to the wealth management world in a very important way. So I would say that you will continue to see pretty high numbers on the return on equity of the insurance company. We optimize the capital every quarter. It's a company that is well managed and well driven, and it has fully get the benefit of a very strong growth on the consumer side.
Okay, thank you so much and congrats on the results.
Thank you.
Thank you, Edson.
Now the last question is coming from Nicolas Riva from Bank of America. Go ahead, Nicolas.
Yeah, thanks very much, Jose Luis, Rafa, and Marcos, for the chance to ask questions. Two questions, two topics. The first one, Marcos, initially you made some comments regarding the money laundering accusations against 3 Mexican banks. I think you said that at this point no other banks are under investigation. I wanted to ask you your thoughts regarding liquidity available, lending available between banks since this event, if you have seen any negative impact in terms of banks lending to each other, and particularly to the smaller or the mid-sized banks. And then my second question on funding and capital, if you can do a recap in terms of your thoughts. My understanding is at this point you're not considering to issue senior bonds in dollars. There's no need to fund dollar loans in the bond market. And then on capital, I think for a while the base case has been you're going to continue calling all of the AT1s. My understanding based on recent investor calls is that you may be looking at issuing tier 2s to replace some of those AT1s, given that for TLAC you can count either AT1 or tier 2 capital, and of course it's cheaper to issue tier 2s. But if you can just do kind of a recap in terms of funding and capital plans for the future. Thanks.
Thank you, Nicolas. The first one is we haven't seen any disruption in the market. Actually, the rates went down, the FX is stronger, and everything is obviously is connected. But we have an authority, Secretaría de Hacienda and CNBV. They are looking, and Banco de México. They are also monitoring what's going on, and the liquidity is there, and nobody is beyond what happened is hurt, and the market is in a very good position. I would say that, you know. So we are happy how it is developing all this, and that's it. There is no anything to say here, no. And the second one is very interesting because it's a matter of where are we moving to, no? And the cheaper one, as you say, go ahead, Rafa, please.
No, I think, and thank you. Well, this, as you know, by law, we cannot say that we want to call. but history tells a story of Banorte. The issue about, as you know, we are in a position right now that we don't need to issue this year anything. The LDR is moving very positive, well below 100 now. And the potential for tier 2, always there is a question why when I think we always balance out the AT1s against the tier 2. And based upon the window of opportunity, we will take the best decision that is for the market. As of today, AT1s have been the best decision that we can. That's that. And on the capital, you will continue to see a pretty strong evolution of the capital base. Obviously, AT1s are an important part of our capital base, but we have a very disciplined way of when we issue in a way that we don't get clogged on the calling of the instruments on that part. This year is a pretty good example of that. So I would say that we never pressure the issuance because we always go into the market when the window is open for us and at the price that we think is fair for us.
Okay, thanks very much, Rafa and Marcos.
Nico.
Thank you very much for the interest in Banorte. With this, we'll conclude our call. Thank you very much.